Well, when you look at the auto sector, yes, the margins are expected to be one of the biggest impact here coming in because of the sharp rise that we have seen for most of the metals. But firstly, let's understand which are the key raw material and what kind of price change we have seen so far. When it comes to steel, crude and rubber, the prices have eased compared to what we had seen in the second quarter of FY26. Aluminum and copper have seen a much bigger price rise. But when it comes to platinum group metals like platinum, palladium and rhodium, these are the key metals where the price increase has been much more than what the street had earlier anticipated. So here's the breakup of what the key raw materials that are used by each of the segments, that is two-wheeler, passenger vehicle, commercial vehicle and tractors. When it comes to two-wheeler, steel, plastic and rubber form a major component, followed by aluminum and copper, and then it's the platinum group metals. For passenger vehicle, again, steel, plastic, rubber form a major part of the raw material. Similarly for CV and tractors. But given the more than 50% rise that we have seen when it comes to aluminum, copper and platinum group metals, the overall impact on margins could well be negative. So here's a breakup of how the prices have increased for these key raw materials so far. Now, why the prices have jumped? Because of supply constraints, tariff shocks and because of the safe haven demand that we have been seeing of late. And this is a breakup of how prices have increased for firstly steel, crude and rubber. Now, we have given two price comparison here. Firstly, we are comparing the Q2 average prices with the Q3 average prices so far, and we are also comparing Q2 average prices compared to the spot prices. So on both the metrics for these three key raw materials, that is steel, crude and rubber, the prices have come off or have eased on a sequential basis and also compared to spot price basis. Now, when it comes to aluminum and copper, there if you see, the prices have increased on an average basis for aluminum by around 11%, compared to spot it's increased 15.9%. For copper, on an average it's 14%, but compared to spot it's increased nearly 26%. And when it comes to platinum group metals, on an average basis the increase is just 27%, but compared to spot prices, the prices have increased by nearly 67%, and this will definitely have an impact on the margins of the auto companies, not in the third quarter, but at least in the fourth quarter or in the first quarter of FY27. So here's what the impact could be. Now, based on average prices, the two-wheeler segment could see a downtake of margins by around 37 basis points. Passenger vehicle segment could see a downtake of around 25 basis points. Commercial vehicle could see a downtake of 4 basis points. And if you compare it with the spot prices, two-wheelers could see an impact of 74 basis points, passenger vehicle of 67 basis points, and when it comes to commercial vehicle, an impact of 32 basis points. Now, given the fact that in tractors, the requirement of platinum group metals is lower and requirement of aluminum and copper is also lower compared to other segments, there could be a positive impact given the fact that steel, crude and rubber, which are the key raw materials, prices of these materials have come down. So tractors based on average prices could see a margin uptake of 20 basis points, and compared to spot prices, the margin uptake could be as much as around 4 basis points.